Before I continue discussing the markets, please take this moment now with helping me and subscribe to my YouTube channel. Click subscribe. Click this bell. Click all. This helps you receive a notification when I post my next videos. Next, click the thumbs up button every time you watch my videos. Okay, let's continue with the view of the markets. It's 2:33 p.m. New York time. The markets close in just under an hour and a half. In this video, I'm going to discuss options. Options are a form of derivative. The futures market's derivatives, options are derivatives, Forex markets derivatives, home insurance, auto insurance, health insurance are derivatives. So this option strategy I'm going to discuss credit spreads, selling credit spreads, you collect income. Each of these charts is weekly. Since it's only Monday, the current candle won't be done. Looking out first at the cash index, S&P 500 cash index. You decide on each of these strategies I'm going to show you if you're bullish or bearish. Bullish, you think price is going higher. Bearish, you think price is going lower. So here's the S&P 500. We're going to look at the stock ETF. They can trade options on it right there. These are option contracts. Closing it. So this whole thing is the option chain, and these are the contracts that have different expirations. We're looking for the ones that expire this week, Friday. So the one we're looking at is January 29th. Expires in 4 trading days. We're going to open up that option contract. Here's calls and puts. So again, you're going to determine if you're bullish or bearish. I'm going to narrow this down to 50. And these are all strikes right here. So the current stock SPY, the price at 383 and 55 cents. Let's look at the nearest strike for that one. There we go. We just round off 384. 384 is the nearest one. And I want to be away from that to reduce my risk. So this column is delta. It's on the same on each side. So this strategy, again, we're doing credit spreads. So if you're bullish, you think the stock's going to stay above this price, we're going to do credit spreads on the puts. And if you're bearish, you think the price is going to stay below that between now and the end of Friday, then we're going to do it on the call side. So let's just go along with the majority of the crowds that think they're bullish. We're going to do it on the put side. And I want to be further away from there. So I'm going to go to delta just below 20. And that'd be 375 strike. And I say I want to do a minimum of 5 wide. Difference between 375 and 370 is 5. And I would be receiving $42. Even though it says 42 cents, that's $42 because that's times 100. Yep. So notice 375. So as long as the stock stays above that 375, I keep all that money. If I want to take lower risk and be further away, I could go down. So now I'm further down. Instead of 375, I went down to the 370, collecting less money, but I'm taking on less risk because I'm further away. So even if the stock goes down to 375, I'm still good because it's still above that 370. You got it? Let's look at on the call side now. This side with the credit spread if you're bearish. Again, let's look for the nearest 20 delta right there. 389. Let's just do a 390 for some sakes. 390. So if I'm bearish and think the stock's going to stay at this price or lower, and I want to be further away from that, I'm going to be here. Again, the price 383. and I'm shorting, selling the 390 and buying the 395, collecting $40. Yep, that puts me further away. But let's just say I want to be even less riskier, move further away. Okay, let's go up to the 400 and buy the 405 and only collect $1. Not so good. That's 5 wide. And what that means is you have $500 put on the sideline of margin. Okay, you saw those prices. Let's go to the next. The Nasdaq 100. Look, it already broke above the high of last week. The S&P 500 is still inside the range. And it's currently red. So let's look at the stock using options on here. The stock ETF is QQQ. And the last price on the stocks ETF is 327. So we're looking for the options that expire this Friday, the January 29th contract. Open it up. Let's narrow this down a little bit more. So maybe you're more bearish on this one. So let's go look for the nearest 20 delta. Let's narrow this down a little bit more. Here we go, the 18. And it's 335 strike. 335 strike. So this, if you're bearish, this would be a bear call spread. And I choose 5 wide just for example. You go wider if you want. I prefer a minimum 5 wide, not less. Collect $61. So here, the underlining is 327. The derivative, which is the option, and this credit spread, $60. Prices are moving. So 327, right there, 327. And I'm reducing my risk and giving myself a higher probability that less likely it would go there, 335. Maybe I want to take even less risk. I'll move it up. Less risk means what? You collect less money. $16. But now look, 340, I'm much further away. Yep, much further away, reducing my risk. So that's part of the money management. You decide what your risk you want to apply and how much you want to collect. I hope you just saw a few examples there. Let's go on to the next. The Dow Jones Industrial Average, the 30 largest publicly traded companies. Look what we did here. We're trading down. We're lower than last Friday. The Nasdaq 100 is higher than last Friday, and the S&P 500 is inside the range of last Friday. Wow, they are all trading inverse from each other. Let's look at the Dow Jones Industrial Average options. That stock symbol is Delta India Alpha. And the nearest one expires this Friday is January 29th, 4 trading days. We open up the option chain and you determine, are you more bullish or bearish? Let's do both. Let's look on the call side first, the bearish calls. This is a bearish call strategy. Again, called bear call spreads. The underlying is 308. So 308 is right around there. And we want to take that lower risk, and let's go to the nearest 20 delta. The nearest 20 delta, 26.17. The nearest one is 17. And the strategy is, again, selling bear call spreads. And that strike is 314. Do a minimum of 5 wide, go up to the 319. Collect $45. Excuse me. Yep, 308 is here. If I want to take a lower risk, well, what do I do again? I can move this up. Let's just say I move it up to 1 strike more. Move it up to the 315 and the 320. Yep, collecting less money. but moving further away. The other example is if I want to collect more income, I could go wider on these. So let's go buy the 325, collecting $30 now. So I'm still short 315. The 315 call by just widening and collect more money, $30. Let's go up even more. The 315 and the 330. Yep, that's why it's not doing so well. They're not paying that well. Yep, so watch this. Going to be a little bit more aggressive. And let's go to the 310 and the 320. $187. So the 310 strike is what delta? 44, much more aggressive. Because the underlying is 308, and I'll be shorting, selling the 310 call, it's so close, a lot more risk. Maybe I want to reduce this risk as well, and maybe just do the, so now I'm only 5 wide, 310, 315, 5 wide, collecting less money. But I've still got that 310. That's real close. So maybe I want to do even lower risk. Bump this up to 320, back to 315 again. Collect $29. Let's go on to the next. The Russell 2000, the small cap stocks. Wow, made a higher high than last week. And it's back inside there again. Let's look at the stock ETF for that one. Do you know your stock ETFs? That symbol is RUT. Just kidding, that's the index. We're going to do the stock ETF, IWM. It helps if I type it incorrect. Contracts, 29 January. Stocks at 213. And let's just look, for example, 213. 213, how aggressive do you want to be? Let's do it right there. Oops, 213. Say you're so bullish, you just feel so certain it's going to go higher. $208, 144. So at 213, again, this is a bull put spread, so that means you're bullish. Is a 45 delta. You're collecting, again, it's 5 strikes wide. That requires $500. Collect 144. Yeah, you don't have much play to be correct. It can move against you real fast. And yes, these trade the same hours as the stock market, 9:30 a.m. to 4 p.m. And you don't have to stay in them until expiration. You close them anytime during market hours for gain or loss. But if you want to know actually what I'm looking for to determine which strikes and other stuff I'm looking for money management, you should join my Patreon page. I'll give you detail what I'm looking for between these bid and asks and which underline and when I'm trading these. If you like this market information I've shared and want to learn more with greater detail, step-by-step training, I have a Patreon page. I share trade ideas for earning monthly income. Below in the description box, click Show More. Scroll down. This link here, click on it. Take you here to my Patreon page. Select the membership and join. Then you have access to unlock my posts.